Well, hello everyone, and welcome back to our virtual seminar series on participating in Australia's carbon markets to meet your corporate climate goals. This series has been designed to increase your knowledge of carbon markets here in Australia and also connect you to the latest developments in the marketplace and highlight opportunities available for you to further engage as you look to achieve your corporate climate goals. And so today we're commencing with Series 2, looking at carbon market strategy, trading and procurement. Over the next few weeks, as you see on the next slide, we'll be focusing on the business case for setting carbon and climate goals, with stories from some leading organisations about their various approaches and activities. We'll also look at carbon neutrality and the Climate Active program, and some practical insights from market advisors, brokers and traders, all with experience in carbon, energy and environmental markets. For those that might have missed our Series 1, this is all now available on our Carbon Conversations CMI website, so please go and have a look. It's a great resource for anyone wanting to know more about how carbon markets operate, both here in Australia and internationally, and some of the key developments and opportunities emerging across all Australian states, all of whom now have set net zero targets and have that in place, as well as some of the latest insights from the supply side of the market, from the key players in carbon farming and the project development space. So that was Series 1. Thanks again to everyone who participated in those sessions. So for today's seminar, we've really stacked our panel with some of Australia's leaders in the business and climate space, including two really well-known household names in the energy and telecommunications sectors in AGL and Telstra, as well as one of the largest voluntary carbon offset buyers in the domestic and international marketplace, Tasman Environmental Markets. We'll also hear from the Director of Australia's growing carbon neutral program, Climate Active, and insights on the evolution of the program and uptake across various businesses and sectors. So I won't keep our all-star cast waiting much longer. A quick reminder to you, our loyal audience, that we want this to be an interactive affair. So please use the Q&A function to send through your questions and get in touch with us here on the virtual panel. Together with the other panellists, we'll do our best to answer them, either via written response or during the live Q&A, which will follow the presentations. As always, you can upvote or like any of the questions to indicate that you also want to know the answers to that one, and that'll really help us prioritise those questions during the discussion. So to start today, I'd like to now hand over to Daniel Sheedy, who's the Director of the Climate Active program at the Department of Industry, Science, Energy and Resources, for a bit of an update on the Climate Active program, which continues to grow, and some other market insights on how businesses are engaging in the program. Thanks, Dan. I will throw to you now and get your slides ready.
Great, thanks Gloria, and thanks for the invitation to present today, and welcome everyone this afternoon. As Gloria mentioned, I'm the Director of the Climate Active program in the Department of Industry, Science, Energy and Resources. I've been heading up this program since April 2019, and there's a lot been going on, and I'll give you a bit of an update today on the program and also some insights into our recent growth. Next slide please, Gloria. So the Climate Active brand recently replaced the old National Carbon Offset Standard, which some of you may be aware of, and it was changed and rebranded to grow consumer and public recognition of the achievements of those who are taking action to reduce their emissions. This rebranding and promotion by government and the members has given members the value proposition they needed to stay certified and to bring on new members, and we're definitely seeing that. The members' fees paid for the underpinning of the market research that went into the rebranding, and the brand was developed in a co-design approach with the members who are partners with the government, and in that design and in the rollout of the brand. The Climate Active program enables that voluntary climate action through the standard, and then it gets recognition through the brand. It's very much solidly underpinned by the government, but we really rely on the members to drive it, and then obviously the consumers to activate it. The brand has now been designed in a flexible way which will enable other types of recognition in the future. Thanks, Gloria. So the strength of the program is built on that government backing and the credibility of the standards. The standards are based on greenhouse gas protocols and relevant international standards. So we do state that it's best practice. We are aware of other carbon neutral claim programs in the market and calculators that are emerging, and that's an evolving space, which is great to see. The third-party validation process is key to the rigour and the transparency and validity of the claims that are made under our certification program. And additional to that is the requirement to publish a public disclosure summary which supports your claims that adds to the transparency. So every certification that we have under our program has a PDS online that anyone can go and view. Thanks, Gloria. So the standards that the government has developed can be used by anybody, and they can help them or assist them on their carbon neutral journey. To get the certification, you do have to enter into a license agreement and pay a fee for us and go through that certification process seen there on the screen. I suppose the thing that differentiates us from other programs out there is the independent third-party validation and that requirement to publish that PDS. So as I alluded to, next slide, please. The program has really been going strong in the last year or two. So there's a bit of a history there of the program. For some of you may recall who are aware of it, back in 2010 is roughly when it started. It was ran out of a low carbon living. It then got subsumed back into the government department, I think around 2012, 2013. Bit of a regrouping period there. And then from 2016 onwards, things started to increase. In 2017, we added buildings and precincts to the suite of standards, partnering with NABERS and GBCA. And then in 2019, we launched the new brand Climate Active. And we're just going from strength to strength. We project, based on current projections, it's looking like we'd be around the 250 mark in 2021, but based on the registrations we've got in our process at the moment, I think that'll be a conservative estimate. And despite bushfires, hailstorms in Canberra and COVID-19, we're still seeing action and momentum continuing, which is really positive. I think a lot of businesses are mainstreaming their climate action, and regardless of delays in business and COVID-19 in particular, we're not seeing a slowdown. Obviously, things like events we expect to see less of under current conditions, and also our airline certifications will be impacted upon by COVID-19. Thanks, Gloria. Just to give you a sense of our types of certifications, we've got a really diverse group of members from Telstra, for example, one of our biggest clients who we recently celebrated coming on board. Their footprint compared to, say, Albert Park Preschool, 2.3 megatons to 9 tons. So we have a variety of footprints that we certify, and just over half of them are in that small category, which is, set by our schedule fee and our footprints. So whilst we don't have a large number of large emitters, that's going to be a growing area, and obviously small to medium-sized businesses, there's a lot of growth there as well. So recognising, next slide please, recognising we needed to make some changes to make it more accessible to the program. Since about 2017, we've been making a number of changes administratively to the program. We've reduced certification fees. As I mentioned, we partnered with NABERS to get the buildings and precincts. Created that consumer-facing brand, reduced our audit requirements, created a register of consultants. You can see the lock-up there on that screen that we're training and recognising consultants who work with our clients to help them on their journeys. And if they pass that training, they can use that registered consultant lock-up for their branding and their marketing. We've preset some inventories, helped with calculators, emissions factors, and just recently, more recently, we've created a small business pathway. Next slide, please. So that's just an idea of our annual fee structure. Comparing 2017 on the right there was what we were charging historically. We reduced those fees quite substantially to try to make the program more accessible. And as I mentioned, the top line of that table there is a new category of under 1,000 tonnes. We've got a new fee structure there to try and incentivise some small business uptake. Some of the transaction costs that are out of our control for the program include registered consultant fees, technical assessment, auditors and offsets. But everything we have a control over, we are trying to make it easier for clients to become climate active. Thanks, Gloria. And this is an example of the branding now that we can offer, which is very attractive for businesses to use in their marketing and communications. We call that our hero shot with that nice colour pattern, and those themes, those colours and those final results for the trademarks were developed with our members. Thanks, Gloria. So we use the word at-a-glance assurance, which I think is marketing talk for giving people that confidence that when they see that lockup on a product or service or an organisation or building or an event, they know that it's a reliable and verified process, and promotion of that trademark strengthens the brand equity. And we're seeing more and more of it, and I'm really glad to see people using it in their communications. Even seeing it in signature blocks and emails is a joy to see as well. Next slide, please. So what do you get for becoming a Climate Active Network member? Apart from that government backing I mentioned before and the veracity and validity of your claims, some of you may have worked with Polly Hemming in my team. She's a little superstar in terms of the communications and promotions that she can assist with. So we're setting up a brand champions group. We can help you with your marketing strategy and the calendar of activities. We can help you with messaging support and give you a toolkit to use. We can offer you market collateral. For those of you who are on LinkedIn and our socials, we're trying to put up posts as often as we can and sharing posts that you put up as members. We can invite spokespeople to come and talk at your events. And we'll also continue doing market research on how our brand is performing. Thanks, Gloria. And so just getting back to the nuts and bolts and the mechanics of it and more about today's theme and the other talkers coming, just a reminder that our process has moved away from focusing on the National Carbon Offset Standard to being climate active. And with that comes not just the element of offsetting, but you're reducing your emissions as well. Part of the process of becoming certified is to ensure you have an emissions reduction plan. So in a PDS, you'll find online from any of our clients how and what they're doing to reduce their reduce their emissions prior to offsetting. And I think that's going to become more and more important, and there's going to be more scrutiny around what companies are doing. It's not just a greenwash exercise to offset your entire emissions footprint. It's also an exercise to change behaviours within corporations and businesses. On the right there, you'll see what the eligible offsets are that are eligible under our program, and we constantly review those, and we also look at the vintage for those as well. Next slide gives you an idea of the profile of offsets that have been used in our program to date. The majority of the units used are international units, which tend to be significantly cheaper than ACCUs. We have seen an increase of from about 2% to 6% from about 2016 onwards on the use of ACCUs. Most businesses like to tell a story about the offset projects that they choose, and ACCUs provide a good news story, domestic story for that, but obviously international projects can provide those good news stories as well, and that depends on the business and the corporation that's coming on board. I'd expect to see an increase in ACCUs, and we'll get into that probably with Alex's talk, I'm assuming, especially as larger businesses come on board. I think they'll want to tell that domestic story, and I'm really interested to hear the other presenters today to talk about how they went about choosing their offsets, what story they like to tell, and what insights they may have for future offset market. And the next slide, just showing you that we worked with the Carbon Market Institute some time back to establish the marketplace. That's a registry. It's a central source of information for carbon offset projects in Australia. Projects have been included after input from project proponents and developers, and will continue to grow as more carbon projects are developed and offsets become available. And my last slide is my favourite slide, and it's getting harder and harder to read. So that slide has got busier since I joined the program. We've got around 100 certified businesses in Australia. And this week, we're very, very close to getting our 150th certification. So just to explain that, one organisation can have multiple certifications. As I said, we cover a broad range of sectors, including airlines, universities, law firms, NGOs, banks, energy retailers, and welcoming AGL recently, zoos, wineries, and obviously Telstra and Belong coming on recently too, which is fantastic. So the network is growing rapidly as climate action becomes embedded in business operations. It's been really good working with Telstra and AGL recently, and I'm looking forward to doing more work with them. We've got about 80 registrations in the pipeline that we're looking at the moment. And the program, I think, is in good shape. It's growing on the back of those barriers that we've reduced, and the rebranding and marketing is really working. And thanks for the opportunity to present today. If you've got any more sort of technical questions, follow me up later on. And I'm really looking forward to hearing the rest of the presenters. Thank you.
That's great. Thanks, Dan. And what a wonderful story. I think that chart over the 10 years just really shows how much the program has grown over the years and the uptake. So thanks for those insights. You can see a few questions coming through for you. I might save them for the Q&A at the end, but if you wanted to check them out in the meantime, feel free. Thank you. I would now like to introduce Jules Scarlett. So Jules works at Telstra. She's in Government Relations, Regional Affairs and Sustainability. As Dan mentioned, Telstra very recently announced its carbon neutral certification with Climate Active. And today Jules will talk to us a little bit about this, as well as some of Telstra's broader climate commitments and targets. So over to you. Thanks, Jules.
Thanks, Gloria. I'm really pleased to have this opportunity to share more about the journey that we have been on. It's been really exciting times for us at Telstra, and we've been through a process recently of significantly increasing our ambitions and our commitments around climate. And so what I thought might be useful for this group today was to explain a bit about the why we have been working on increasing our ambition, and a bit more detail about the actual commitments that we have made, and diving a little bit more into particularly the commitment we made around carbon neutral and what that meant in terms of us going into the market for offsets. And then I'd also just end with a bit more about the lessons learnt along the way. So a bit of background for those who wouldn't be as across in terms of our climate change profile. For context, to understand the scale of our challenge, we operate at Telstra on a global network, but the majority of our operations are based in Australia. Our network runs via more than 25,000 physical assets, and that's things like mobile towers, telephone exchanges, data centres. They're all located in metro and remote regions of Australia. I'm going to let the cat out. And then, but importantly, I think it's good to understand that that about how much we consume. So, and really, it was our level of consumption that drove us to think that we were the ones that had to be responsible for doing something about our impact. Because annually we consume around 1.4 million megawatt hours of electricity. And if you just look at our scope 1 and 2 greenhouse gas emissions, it's around 1.3 million tonnes of carbon dioxide equivalent. So as one of the larger emitters domestically here in Australia, thinking about more than 95% of those emissions coming from the electricity we use in those assets, we wanted to really focus on that and the sources of energy that we use. And that presents us with a challenge and an opportunity. And so when we were thinking about contributing, we needed to think about not just that offset, we also absolutely need to think about absolute reduction as well. And that's, as you'll see when I go through the way we've framed our ambitions, it touches on both those angles. So why now though? Why in terms of needing to increase our climate ambition? Well, globally, we're continuing obviously to see the adverse effects of climate change and increasing extreme weather events. As a business that operates globally, we and in some of the more remote regions of Australia, we're increasingly actually susceptible to climate risk ourselves. So we know that we needed to adapt to those physical impacts. But at the same time, if we can be doing more as a company to be helping to reduce the impacts, that has a really good outcome. And as well, like recently, you know, for an organisation that was right in the crux of responding to the natural disasters through the bushfires, through the summer of bushfires, this 19 and into 20, it became really, really top of mind for our executive team as well to be looking and understanding the drivers behind not only sort of extreme weather events, but also the flow through into the climate connections. So, you know, increasing our commitments also aligns really well with what we've been driving at hard, which is responsible business. So it's not just about the resilience, it's about what we think is the right thing to be doing. And it also reflects a significant uptick that we have seen in interest and awareness and expectation from our range of stakeholders, which include our customers, our communities that we serve, our people, ourselves internal, and importantly, our investors as well. So I thought I'd take some time now just to step through our 3 goals. And, you know, we've been reporting greenhouse gas emissions for more than 15 years. And we previously set carbon goals, climate goals and change targets. The most recent ones we have been working through that it recently came to a 3-year end related to intensity more when we were looking at it. So we were ready to really put in place the goals that would take us through. And it was great to have a commitment from a board and an executive team to not just be looking at a 3-year, but to be looking as long-term as we ever have in relation to climate change. So the 3 goals we put in place, one was, and it's sort of like a very here and now while we are looking at some of the longer term, and that was to be carbon neutral in our operations from this year, from 2020. So we recognise that while we were working towards some of our longer term goals that I'll highlight, that we needed to do something about the emissions that we are actually letting out now. And so in that way, we thought if we offset those and make it from this year, we're in the short term showing, you know, through our commitment by purchasing offsets to counteract the emissions from our operations. And I'm really, really proud to say that last month, with the help of Climate Active, Dan, we were able to achieve that target ahead of schedule. So I'll talk a little bit more about that in a moment. But the other 2 goals, the second goal is a 2025 goal. So this is to be a renewable leader by enabling renewable energy generation equivalent to 100% of our own consumption by 2025. So the majority of our emissions arise from the electricity we use. And so we believe we have a role to play contributing to the decarbonisation of the electricity grid. And so we've already made significant advances in that area over the last 3 years. So we have 2 key power purchase agreements in place, the Murra Murra Solar Farm and the Emerald Wind Farm, and they're generating renewable energy. And the commitment we've made is to seek to increase our contribution to generating renewable energy and do that over the next 5 years to counterbalance the energy we are using ourselves as a business. But the real workhorse of our commitments is the 3rd one. And this is where the traction and the rubber really needs to hit the road. And so this is where we have made a commitment to reduce our absolute greenhouse gas emissions by at least 50% by 2030. And it's an ambitious target. We don't have line of sight to exactly how we will do that to every percentage, but we decided as an organisation, our board stood behind us making the commitment that we could see part of the pathway, but they thought it was important enough that we actually make that commitment and across this period drive to get that reduction by 2030. So we're pretty excited about that. We decided to not be, you know, taking our time talking about what others should do and to be commenting on policy more broadly, but actually just to take steps that we could make a difference on, which is where our commitments were. So just then specifically, because of the heading of this topic today for this working group is around, you know, I thought I'd delve a little bit more about the carbon neutral commitment. So in relation to that, we weren't starting from scratch. In December, one of our challenger brands within our Telstra group, the Belong brand, they became Australia's first carbon neutral certified telco. And so we were able to take some of the learnings there and work together. We chose to work with Climate Active to ensure that when we were doing our offsetting of our emissions from operations, that was done transparently, using appropriate carbon credits, and was certified by a reputable organisation. So although we had experience in calculating our own emissions profile, purchasing carbon credits was a new activity for Telstra. And I can say, to work in an organisation that often has historically been quite risk averse, to bring a new market and, as was mentioned earlier, have 2.3 megatons of emissions to be offsetting was a very, very dynamic experience. And when we think about the new and emerging carbon market, there was so many new things for our teams to be considered. So as people on this call would be aware, there are many different types of carbon credits available, and we developed a two-stage process to identify and agree and review credits for sustainability. And one of the key learnings along the way is that the credits need to really suit your own organisation. There is so much that is available, and step one for us was to really put that lens on doing the due diligence on the available credits to ensure the project made the basically not only sort of a baseline requirement, but also a set of requirements that we impose that they would need to sort of be reflective of the requirements of our own supplier code of conduct. We wanted to understand a lot about the provenance and understand the details about the owners and any associated financial sort of reputational elements that we needed to understand. Then from that sort of bucket of opportunities, our second step was to narrow our search to maximise purchase of offsets that effectively maximise the co-benefits we saw by aligning to other priorities we had. And for us, that ensured that involved including ensuring that we purchase credits from countries where we operate in, so that we have operations in, and that we're also aligned to addressing some of the significant impacts such as renewable energy generation. And we wanted them also to support some of our broader sustainability drivers and support the communities in which we operated on. We were operating in short timeframe to get the 2020 commitments on our carbon neutral certification that we were driving for. And so the majority of our credits have been purchased in our first year from solar and wind farm projects in India, where we have significant operations. But the remaining portion of our credits were purchased in Australia. And one of the key projects I was going to mention is the Southern Aracuna Savannah Burning Project in Cape York in Queensland. And the reason why this was particularly appealing for us is because of the commitment that we have had in relation to supporting Indigenous communities, but also because we know that we can help to enhance the effectiveness of that particular project through connectivity products, so the type of products that we actually service. So very appealing to us because of that combination of traditional knowledge of savannah burning via Indigenous communities using technologies to manage the savannah fires. So part of the technology to enable that activity is the services, and that's why it provided, I think it was mentioned, Dan, that one of the things that organisations are looking for is also the story that can be told around their purchasing carbon portfolio, which was really important for us. Very quickly, some key lessons learned in that are relevant, I think, for corporates. We learned that you've got to really understand your climate change impacts to know where you're going to focus. You've got to look to reputable organisations to ensure that, for example, with Climate Active, that we have access to the latest science and to understand the importance of referring that to your level of ambition. Invest the time to understand your organisation's own risk appetite. That will be different for everyone, including the trade-offs between different types of risks with your reputational financial. Get an outside-in perspective. We got help from global knowledge about the technical specialists involved in these markets. I think it's almost, the next one is almost the most important, get that cross-company buy-in. We were able to move at the speed we had because we had a strong base of support through our executives for climate change. But in amongst that too, look for where your champions are. The final comment I've made is look for your climate change advocates. They might not be in the functions that are actually the most in need of the drive and focus, but they may be a voice which is really influential in your organisation, and get them to contribute to the climate change setting ambition. So I hope that that was a bit of a snapshot leading to what some of the questions might be, and I'll leave it there, Gloria.
Wonderful, thanks Jules. That's some really great insights there from such a large company that you guys are, and your ambitious 50% by 2030 commitment, and the board that sticks behind that in terms of their commitment to that stretch goal is really interesting to see as well. Particularly that due diligence lens that you put over the offset purchasing and how you went about it, I think will be very valuable to many people joining us here today, so thank you. So moving on to the energy sector now, I'd like to welcome Simon Serafian, who's the General Manager of Trading at AGL Energy. AGL also recently announced their customer carbon neutral offering and released their updated climate statement commitments. Simon will touch on these today, as well as share some insights on AGL's market development approaches and their support for the evolving voluntary carbon market. Thanks, Simon, for joining us today.
Thanks, Gloria. And good afternoon to everyone listening in. Really appreciate the opportunity to participate here and talk about our commitments and aspirations at AGL. Firstly, a little bit more about me. I've been working in the energy industry for almost 20 years. Yeah, currently the General Manager of Trading at AGL, and I'm really proud to lead a diverse team of traders and analysts. Our job is the active portfolio management in the various markets that AGL is a part of and has an exposure in. You know, these include electricity, gas, and importantly here, you know, the renewables schemes, the large and small scale renewables targets, and the various state-based energy efficiency schemes. And of course, most recently, our activity in the voluntary carbon markets. And we've just heard from Jules at Telstra, and thanks, Jules. It was really good to listen to you talk about Telstra's targets and commitments. I want to give you a concise version of AGL's journey. Firstly, I'll talk about the commitments AGL has made in our climate statement announced in June, and the broader context that's led us to setting these commitments. And then I want to focus on a few things we're working on now, one of which is our new carbon neutral offering to customers that Gloria mentioned, and another being our supporting the evolution of Australia's voluntary carbon markets. But firstly, quickly, our commitments. You know, broadly, we've found the case for change to be quite clear, and that's in keeping in step with shifting community, customer and investor expectations, as well as that of many of our own employees. So our overarching goal that we've set is to achieve net zero emissions by 2050. And Gloria, if you could just turn to the next slide. You know, alongside our goal for net zero emissions by 2050, you can see here our 5 commitments: offering carbon neutral services, supporting voluntary carbon markets, investing in flexible electricity supply, undertaking a responsible transition, and being transparent. But we're not just stopping at goals, and I want to emphasize, you know, some of the near-term actions we're taking. And I want to spend the most time talking about the first 2, so I'm actually going to start with the third one and loop back. And that is, you know, we're investing in new sources of flexible electricity supply. We think that the energy transition is going to be led by 3 things: customer demand, how communities act, and how technology evolves. We see this, you know, being realised by generating low-cost power using wind and solar resources, but really importantly and critically backed up by technologies like batteries, hydro, and, you know, for much of the energy transition, gas, because it's, you know, as more renewables come into the energy system, we need to make sure we're supporting the development of storage and firming capacity, because after all, firmed renewables, renewables that are backed up by capacity when their fuel source isn't available, are actually the cheapest form of new generation. And to that end, yesterday we announced that by FY 24, our target is to have 1,200 megawatts of new forms of flexible capacity, consisting of 850 megawatts of grid-scale batteries and 350 megawatts of distributed and demand response assets. We're also aiming for 34% of AGL's electricity capacity to come from renewables and clean storage, compared to 22% today. And we've got a goal for 20% of group revenue from clean energy or carbon neutral products, compared to 11% today. And importantly, these targets are now included in our executive long-term incentive plan. But onto our commitment to offer customers the option of carbon neutral across all our products. We know that our customers want choice. 43% of AGL's customers cited the availability of green and sustainable options as a reason to choose their energy provider. And in the last 12 months, worries about the environment have risen by 9%, and now actually rank the third top concern after cost of living and health. And we know that customers are increasingly seeking carbon-friendly products and services across all that they purchase, and that they remain focused on balancing cost and quality. And so with this in mind, we think that customer demand for carbon neutral products is going to be a significant force for accelerating the decarbonisation of the energy system. And that's what's actually led us to create a policy of always offering a carbon neutral price on all of our products. And this is certified by the Climate Active program. And thanks to Daniel and all the folks at Climate Active for helping make our accreditation process go smoothly. It's really great to see the growth in Climate Active's accreditations. And so how is it going? Well, pleased to say since launch in July, we've seen over 6,000 customers sign up for carbon neutral. This spans residential customers all the way up to some of the larger consumption business customers in the market. At the moment, our offering is available for electricity, but we're targeting June 2021 to have a carbon neutral option for all our products and services. Initially, the projects that we've selected to purchase offsets from are the Westmere Native Forest Regeneration Project in New South Wales, as well as the Burnstows Replacement Project in Kenya. We assess projects on a number of different criteria. These ones were selected partly because of the co-benefits they provided the environment and the local communities. And in the case of the New South Wales project, it's where, that's the state where a large proportion of our customers actually are. And so our carbon neutral offering also sits alongside our existing green power offering as well. And that green power offering essentially means that we purchase an additional amount of renewable energy equivalent to the customer's usage. Customers can opt into one, neither or both of those. Our offering, a perspective here is that it gives larger corporate customers the opportunity to start making a difference in managing their carbon footprint. We're really keen to hear from our customers about what they want and value. In a way, our offering is a first iteration of many, and we're really looking to evolve it. Another of our commitments, as I mentioned, was to support the evolution of Australia's voluntary carbon markets. We've said that we'll seek to supply tradable products to deliver carbon neutral services to customers. We've been trading commodities for almost 2 decades, from modest beginnings in the early 2000s electricity market to today, where we at AGL manage a large, diverse, multi-asset, multi-commodity portfolio. And so a key part of our entry into the carbon market is in connecting demand from our customers who are increasingly asking for renewable and carbon neutral options to sources of supply. And I note that trading of ACCUs for voluntary purposes is small at the moment. We saw in Daniel's presentation, many of the offsets that quitted are international, but ACCU trading is growing for voluntary purposes, and we're really keen to see the continued development of Australia's carbon market, and importantly for it to maintain its integrity standards. We think an increase in depth and liquidity, like the reason we're talking about this is it's positive for the domestic market because ultimately it'll allow customers to seek out the lowest cost emissions reductions available in the economy. So we're intending on building our portfolio through trading. We want to onboard more counterparties, and in time we'll assess how we can build our longer term portfolio through contracting supply. And this is a priority for us because it's obvious we have a large carbon and renewables position that's enduring into the next few decades. The final thing I'd add is we're also supportive of linking markets for emissions reductions for voluntary demand purposes, such as the conversion of LGCs and ACCUs, but provided we can be comfortable that integrity principles are maintained. The final one I wanted to talk about was our commitment to transparency. I mentioned earlier that the importance of staying in step with investor expectations. Now, as I highlighted, our new executive long-term incentive plan will include carbon transition metrics, and we're actually one of the first companies to do this. But we're doing more to be transparent, and that's through our adoption of the TCFD framework and commitment to public disclosures. For those who can't place the acronym, TCFD is the Task Force on Climate-Related Financial Disclosures. And use of an adoption of the framework is actually voluntary in Australia, but there is growing expectation from investors, governments, customers, communities that companies assess their climate-related risks and actually report them. We've been using the TCFD framework since 2018 to report on, our governance, risks and opportunities, etc., in relation to climate change. As part of this, we actually perform scenario analysis to update our forecasts on the pace of climate transition and its impacts on our business. And our report released just yesterday looks at the possible impacts of climate change on our business actually out to 2050. And it actually expands the analysis further to include a scenario which the full objectives of the Paris Agreement are met. And so the modelling shows we're actually resilient to a range of these carbon scenarios. So there's been a lot going on at AGL. This is the short and sharp version of some of the things that have been front of mind for us. And we're really excited to lean into the goals we set for ourselves over the next few years. And so my recommendation to other organisations aspiring to set their own climate goals is, similar to Jules's, there is good advice out there. Spend the time getting alignment on targets and objectives with executives, and spend the time and work in with, particularly with the Climate Active accreditation process for you to establish your own program. Thanks to everyone taking out the time to listen, and Gloria, back to you in the driver's seat.
Thank you, Simon. That's great, and some wonderful insights from yourselves as well in terms of your participation in the program for Climate Active. And good to see that you'll be offering that across all your products in the future as well. So we'll keep an eye out for that. I think there's a few questions in the chat for you as well. So thanks to the panelists who have already started answering those, because we are running a little bit behind time, a very rich discussion here today. But I will move on to our next presenter to close out the formal presentations here today. We have Alexander Lewis, who's our Commercial Manager at Tasman Environmental Markets, or TEM, so Australia's largest carbon offset supplier, who works very closely with a range of industries and businesses in corporate Australia to support their climate and sustainability goals and journeys. Alex will share with us some key market insights from the corporate sector and some practical considerations for voluntary market involvement and participation. So Alex, my friend and CMI alumnus, over to you.
Thanks, Gloria, and hello everyone. I am just going to start sharing my screen. I think, Gloria, can you see that?
Yep, good to go.
Great. So it's really encouraging to follow up on Jules and what Simon have talked about their carbon neutral commitments with Telstra and AGL, as well as hear about the uptake that Dan talked about under Climate Active. And we're definitely seeing a lot of that momentum in the market at TEM. And so I'm probably going to reinforce a couple of points that have already been mentioned by the panel, particularly around carbon offsetting and the voluntary market. And the message I really want to convey in 10 minutes or less is that a well-executed carbon offset strategy really has a significant amount of detail that actually sits behind the purchase of the actual offset, which you really want to be aware of if you want to manage your risk, but also add value to the business in the market. And that's exactly what we do, because at TEM, our business is offsetting, plain and simple. So we also work with a range of large corporates that are either carbon neutral or going carbon neutral. That includes entities like Qantas or QBE, Australia Post, Lendlease. But rather than a broker or specifically a developer or consulting firm, the way we work at TEM is more like a corporate climate change partner, because our focus is on long-term relationships where we can really understand a business's position in the market and their carbon footprint and how to neutralise it, but also how to add value along the way. And these are the faces behind our team, and I'm sure many of you know Mr. Peter Castellas, and usually he'd be up here in the spotlight where he likes to be, but I've got some airtime today. But it's a diverse team, but we're really passionate about carbon markets and really facilitating voluntary action. The reason that carbon offsetting has been important to today's session, although it's just one element, is that for many organisations, they can't go carbon neutral today without the use of carbon offsets. And that's just the reality of where we are right now. And so for those organisations, the carbon offset strategy is a critical piece of the overall puzzle. And what you want with that offset strategy is not that you're just going to purchase offsets, but you're also going to manage your risk in the carbon market over time and add that value that I talked about before. So it wouldn't be a climate change presentation if I didn't have an iceberg in my next slide, but it's not what you think. So at the top of our iceberg is the carbon offset purchase, because that's exactly how we view it at TEM. It's just the tip of the iceberg. So you want your strategy to actually go far deeper than this. And for any organisation that is going carbon neutral or maintaining carbon neutral over time, you really want to be able to answer these questions in real detail. And the first one is price, and not just the price of your offset purchase this year, because I can guarantee with a lot of the corporates we work with, when they get to the board or the executive decision-making body, there's going to be a question at some point from an individual about what's the cost of this carbon neutral commitment to the business this year, but also in 2 years' time or 3 years, even 10 years' time. And it's a fair question, because a carbon neutral commitment's not just meant to be a one-off commitment or a commitment when times are good, as COVID so well demonstrated. But anyone who's actually tried to answer the question of what does a future offset cost knows that that's a really hard question to answer. And you can be pretty certain of the direction of the price curve, but how steep is it and how quickly will it get there or fluctuate in the meantime? And when you're talking about $1 here or $3 there, when you're offsetting thousands or millions of tonnes, that can make a really big difference. And you can look at things like price forecasts and spot market history, but that doesn't remove price uncertainty. It just narrows the price uncertainty. So what we see is that the only way to guarantee price and volume from year to year is a multi-year contract. And that's why most of the corporates we work with operate in that way, because one, you know what the price is year to year, so there's no uncertainty. And two, you actually don't have to manage that price risk in the market yourself. And why is that important? And just as an example, maybe you're offering a carbon neutral product. And I'll use Qantas here as an example because we've been partnering with them for 6 years, but they've been offsetting for over a decade. And I'll just caveat that they've obviously been hit really hard from the outcome of COVID, but their commitment to sustainability and carbon neutrality is absolute, which was to my earlier point that it's just not a one-year commitment. But over that 6-year timeframe, they've been offering a carbon neutral product to their consumers, and we've been managing the price security and the availability of supply that actually underpins that product through multi-year agreements. And the outcome of that has been that the cost to the consumer has actually remained constant over that time. And that's really important, because what you don't want is to have a product out there where you don't know what the price is going to be from year to year, or that it might double or quadruple. So, and the other point is that, you know, you want to be able to assure that the offsets that you've promised, you can actually deliver that volume of those offsets. So think about multi-year contracting, and not just for price security, for volume uncertainty as well. And maybe historically there was a perspective that you could turn up to the offset shop and that there would be the particular offset that you wanted in abundance of volume and at the particular price point you want. But we don't necessarily see that as a risk managed approach moving forward. So what sits behind our multi-year agreements is that we manage supply in a number of different ways so that we can assure we always have availability. And that includes exclusivity over certain projects. It includes deep relationships with international and domestic project developers. It includes our own origination capability. And it also includes our ability to hedge large volumes over multiple years, so that our risk is managed, but also our corporate's risk are managed as well. And that really goes on to my third point, and a point that's already been raised by the previous presenters, is that if a corporate like Qantas is putting their offset strategy in our hands, then they're trusting us that we won't just deliver on price and volume, but we'll also deliver on quality. And that's why due diligence is so important in any offset strategy. And for us, we only buy units that are eligible under Climate Active, but that's really only the start of our due diligence journey, which really goes far beyond that, particularly for our international and our long-term purchases. So we would start, for example, with a review of the project developer. What are their projects? What's their track record of delivery? Are they a signatory to the Code of Conduct? Do they have the financial services license to be providing the services that they are? And then we'll look at the projects themselves. And for the projects that we support in India, for example, that means that our chairman and our director have actually gone to India to visit some of those project sites. And we've done our own assessment of the project on the ground, of the methodology, of the working conditions, of the co-benefits. It means also that the projects we support from Papua New Guinea, that our chairman has actually spent 2 days travelling down the Sepik River in Papua New Guinea to be at the project site and meet with the community leaders that are involved in the project and the project staff. That's really important, because we take an extra level of responsibility around the integrity of our projects, and you don't always get that when you're just buying off a screen. So that's managing risk in your offset strategy. And that really goes on to my next point, which is around portfolio construction. Portfolio construction. And when I talk about portfolio, I'm talking about the different projects from which your offsets are sourced from in the market in terms of location and technology. But when you think about portfolio impact, and again, this has already been mentioned, is that you also want to think about how your portfolio resonates internally with staff, but also your consumers and investors. So how does your project portfolio actually resonate with your corporate brand and image? When we worked on carbon neutrality with Lion, for example, in their portfolio, they're supporting a project for Malawi that actually avoids emissions, but also protects habitat for actual lions. But it was also important for them in their portfolio that they invest back in rural Australia, where the barley's grown for their product. And for Qantas, it was different. The incorporation of Indigenous fire management offsets provided them one way to support Indigenous communities and traditional practices through their Reconciliation Action Plan. And actually, by incorporating those offsets, it's actually become the biggest spend on Indigenous enterprise through the business. So portfolio construction is not just about adding value and maximizing impact. It's also about aligning your portfolio to your broader corporate goals and strategies. And that's a good segue into my final point, which is messaging around your offset strategy. And I think it's been made pretty clear through this whole series that an offset's not just a piece of paper, and it's not just a tick in an electronic registry. It's so much more than that. And the project developers who actually were on this series a couple of weeks ago, they talked about the impact that these projects actually have on the ground. And it's the, it's the emission reduction, but it's also the people who are involved. It's revaluing nature, it's improving agricultural productivity, and it's valuing traditional practices because it's actually climate finance. And our creative director at TEM is really fantastic at telling the story behind each portfolio that we've put together, because her aim is to make people fall in love with offsetting. And there is actually a lot to fall in love with if you're willing to go below the surface. So when we worked with Lendlease, she put together a presentation that included video footage from our project sites and a story about the emission reductions and the co-benefits. And staff got to actually vote on what projects they wanted to make up that portfolio. Now, not only did that create internal buy-in for what the company was doing, but it also created this education internally that we're not just offsetting, we're actually financing projects that reduce emissions and have all these other co-benefits to people and in the environment. And when you go out with your strategy, you really want to be able to tell that story, because that's what resonates with people, and they want to understand that, that the project's real and that the emission reductions are happening and that you're having all these other benefits to people and the environment. Because quite frankly, the story of the finance that flows from corporates through carbon projects and through offsetting to these projects is a critical piece of the puzzle in reducing the world's emission reduction goals. So I know I'm short on time, but if I was just going to say a couple final things, it'd be that just remember that when you execute a strategy like that and you're really able to answer all these points, you're doing so much more than just buying an offset. You're really having a much bigger impact, and that impact should be celebrated and it should be encouraged. So that's our perspective at TEM. Thanks, Gloria.
Thanks, Alex. Lovely insights and beautiful imagery as well. A testament to the team that you've got there at TEM. We are running close to time. I'll take maybe an extra 5 minutes on today's session, just because we do have such a rich conversation going here in the dialogue. So if anyone's happy to stay online, please do. Jules, thanks very much. I think you've done a great job answering a lot of the questions that have been directed at Telstra already. Dan, I can see there's quite a few questions in there in relation to the offsets integrity principles under Climate Active, and I can see you've answered and put some links in there. Was there anything else you wanted to add verbally while we're here?
No, only that we are looking at that list. Obviously, it's an evolving space, and there was a question there about Paris and what they mean to those units. So that's something to watch in the future in terms of eligible units in voluntary markets and how Article 6 evolves under the Paris Agreement.
Wonderful, thank you. Simon, there was a question in there just around the 6,000 strong customers that have come on board or suggested they're interested in accessing your carbon neutral products. Do you have any more information about the types of those customers and potentially their reason for coming on board, in particular if some of them are in fact themselves trying to go carbon neutral, or some of the other demand reasons for those customers joining you?
Thanks, Gloria. Yeah, the reasons are varied for customers, and just to directly answer the question, obviously 6,000 is the number of customers that have gone carbon neutral just since we launched 7 weeks ago. I think what's an important number and more representative of how our customers thinking are that 43% of customers do find that a carbon neutral or green offering is important for them in selecting their energy provider. Obviously, 6,000 is a small proportion of our 3+ million customers, but the sign-ups remain quite strong each week, and you know, we'd expect this to grow quicker as we expand our offerings into gas and our telco services, because at the moment we're offering it for electricity.
Great, thanks, Simon. If I just think back to all the conversations we've been having here today as well, I think two main themes have come out of this, and it's due diligence. I think both on the demand, the buyer side, and also the sell side. I think that the importance of due diligence can't be understated. And also partnerships. I can see there's a lot of comments here as well, just talking about the partnerships within organisations, but also across different sectors in terms of getting the right people together to really help with that journey. And Jules, I can see you've had a lot of commentary in there about who's supported you along the way with your Climate Active certification. Is there anything else you wanted to comment on while we've got the floor here?
I think maybe the only thing, Gloria, I'd add is just to reinforce that it's not just the external partners, the consultants, the Climate Active. It's really about winning the hearts and minds back in your own organisation, and that was definitely what we needed to do. But luckily, it's sometimes when the open doors are there, you've got to make sure you boldly step through. And for us, the sentiment was right for this to be. So we just had to make sure we came with the right data and facts to enable the choices to be made to make the strong commitments. That's all I'd say.
Thanks, Jules. Yeah, that's great. And I think, Alex, you summed things up great, bringing everything together in the end there around some of those challenges for corporates and the key things to consider there. Just a quick final comment from you, I guess. Anything when an organisation is looking to go carbon neutral, I guess what's the biggest challenge for them? I know you get a lot of common questions in our discussions. I know you've mentioned corporates always asking those very similar questions. What do you think is the biggest challenge for corporates now, and what advice can you give them?
Yeah, I think the common one that really comes up for us is the price question, and I think, you know, it had already been touched on earlier that you know, carbon markets, they're not normal markets, they're politically created, and there are so many moving parts to these carbon markets that can really influence price. So I think that's probably the biggest challenge that we find that corporates are facing. So that's one area that we really like to work with them on, because we're in the market every day. So that would be my final point, yeah.
Great, thank you so much. Well, I think we'll have to leave it there today. It was a wonderful discussion, and thank you so much to all our panellists who joined us here today, Daniel, Jules, Simon and Alex. I'm really pleased to have you on board, and as you can see, the market's very interested in where this is heading. We've had such a rich discussion, a lot of Q&A going on today. Thank you, of course, to my team here at CMI behind the scenes, and all of you, our participants, for joining us every week for these really insightful conversations. We hope you can make it along to the next two final seminars in this series over the next couple of weeks. And we look forward to seeing you next week. So thanks for staying on the line for the few extra minutes, and have a great Friday.
Thanks, Laura.